We all know that market goes up and market goes down. The cycle may not be entirely predictable, but there is certainly a pattern to them. So keeping that in our mind, today we are going to discuss the 4 phases of the market cycles. So we are going to see how to recognize these 4 phases and what they mean for us as an investors. See, cycles are everywhere. For example, water cycle. So you all might be familiar with this water cycle from childhood, I think. So in water cycle, what happens? The water is absorbed by the sun, the water is evaporated and it's converted into cloud, and again it rains, and the water is stored and again the water gets evaporated. So this cycle keeps on repeating. And another simple example would be a weather cycle. So at first we can see a rainy season, then we can see a summer season, and after summer season we can see a winter season. So in this way the cycle keeps on repeating. The same way there are cycles in the stock market. So if you are able to identify this repeating cycle in the markets, then it can provide a good opportunity for you as an investor or even for traders. So there are 4 phases in the market cycle, and the first phase is accumulation phase. So you can see this accumulation phase when the market has bottomed out. So after a huge downtrend, you can see this accumulation phase. So in this phase, the stocks are usually sideways or it might be range bounded. And this is the phase where the value investors or the value buyers kick in. And the accumulation phase is often characterized by a relatively low trading volume as institutional investors quietly accumulate their positions. This is because they want to avoid driving up the prices of the stock too quickly and alerting other investors to their intentions. And in this phase, with the help of some technical indicators, you can see some bullish signals as well. You'll be able to spot a bullish chart patterns or a positive volume divergence or increasing accumulations or distribution readings. Although some technical indicator is giving some bullish signals and value investors are accumulating their positions in this accumulation phase, but the thing you need to remember is the market sentiment is still bearish in this accumulation phase, and the financial media coverage would be still concerned regarding the inflation data or the unemployment rate, and still the overall market sentiment would be bearish in the accumulation phase. So after the accumulation phase, the next phase we are going to see in the market cycle is the markup phase. So the markup phase in stock market is also known as a uptrend or a advancing phase. So basically in this phase, the stocks prices are raising drastically towards upside, and also in this phase the momentum players or the momentum traders kick in to take an advantage of the bullish rally. In this phase, the stock prices experience a series of higher highs and higher lows, forming a strong upward trend, and this is the result of increased buying interest and positive market sentiment. And in this phase you can see an increase in trading volumes as more market participants become interested in the stocks and actively trade in it. And in this phase you can see a positive media coverage. So the financial medias are contributing for a price appreciation by fueling the investor interest. And from this positive coverage you can see the market sentiment completely turning bearish to bullish. And after this markup phase, we are going to see a distribution phase in the market cycle. So in this distribution phase, you can see a gradual decline in the price and a shift in the market sentiment from bullish to bearish. So this is a phase where value investors who accumulated their positions in the accumulation phase are going to start exiting their positions. And in this phase, you can see the weakening of price momentum. So the upward momentum that you saw in the markup phase slowly starts to fade away, with the price forming lower highs and the lower lows. In this phase, you can see a decreasing trading volume. Trading volume may start to decline as the distribution phase progresses, reflecting a decreased buying interest. And in this distribution phase, you can see a negative news and a negative market sentiment. As a result, investor starts to questioning the stock's ability to sustain its upward momentum. And the fourth and the final stage of this market cycle would be markdown phase. So the markdown phase is also known as the decline phase, and it is the final stage of the market cycle. So in this phase, you can see a rapid decline. The prices of stocks fall sharply and often forming a series of lower lows and the lower highs. And in this markdown phase, you can see increased selling pressure, and the investors who bought during the accumulation phase or the markup phase start selling their shares to avoid further losses. And in this phase, you can see panic selling. As the price falls drastically, some investors may panic and sell their shares at any price. And at this phase, the market sentiment completely switches from bullish to bearish. And after this phase, you can again see a accumulation phase. So this is how the cycle keeps on repeating. So these are the 4 phases in the market that you as an investor need to look out for. And by identifying these repeating cycles in the market, you as an investor might get good opportunities in the market. So now you're on the Angel One Web application and you're able to spot the SBI chart. And here I have an example of the market cycle. So as you can see here, after a huge rally towards downside from the SBI stock, you can see the SBI fell almost around 40%. So after the SBI bottomed out, you can see the accumulation phase, right? This is the first phase of the market cycle. You can see the accumulation phase where the value investor kicks in and where some technical indicators indicate some positive signals, right? In the accumulation phase, you can see the SBI stock was range bounded, and here the value investor slowly starts to accumulate their position. So after this accumulation phase, you can see the markup phase, right? So after this accumulation phase, you are able to see a huge rally towards upside, and that rally is called as a markup phase. So you can see almost a rally of 70%, right? So this is the markup phase where the momentum players kick in. So this is the markup phase where you can see a huge rally towards upside, and the market starts making higher highs and higher lows and higher highs and higher lows, and you can see a strong uptrend, right? So this is the markup phase where you can see a good rally towards upside. So after the markup phase, next phase is distribution phase. So in this distribution phase, the market sentiment slightly turns from bullish to bearish, and you can see the market turned out to be bearish here. And in this phase, the investor who accumulated their positions in the accumulation phase will slowly start booking their profit and exiting their positions. And after this distribution phase, the last phase is the markdown phase. And in this phase, you can see the market completely turns out to be bearish, and here you can see the panic selling happens. So the market sentiment completely turned from bullish to bearish, and here the investor who accumulated positions in the accumulation phase and the markup phase start selling their position to avoid their further losses.